A meme stock emerges from a recent IPO, and the lackluster CoreWeave IPO suddenly reverses course. Will irrational stock moves entice more companies to go public? Or will the uncertainty of tariffs close the IPO window entirely? Stablecoin startup Circle has filed for an IPO. This top 10 upcoming IPO will join Klarna and eToro as the next wave of public fintechs. Who's next? In IPO Radar news, Humanoid Robots and Plaid raises new funds. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com. And I'm new to podcasting, but I founded this website back in 2016, so I've been writing about this for a long time. And usually after the IPO, we kind of wash our hands of these companies and let them be public and identify the next opportunities coming through the pipeline. But I want to talk this week about two IPOs that have been acting somewhat irrationally in the public markets. And I don't know if that's reflecting badly on IPOs or if it's going to entice bankers to bring out more IPOs, because we know that when the market is willing to overpay or overvalue an IPO, that the Wall Street bankers love to IPO at that point so they can cash out and let retail investors hold the losers while the stock prices come down. And obviously that's not good for retail and not what we're looking for. And then we have these tariffs going on. The president announced tariffs Wednesday evening after the market closed, and stocks immediately started to tank. And I'm recording this Thursday morning, stocks are down. And we don't know if this is going to impact the IPO markets or this IPO window. That remains to be seen. It seems like the fintechs are going to be comfortable IPOing now, especially the cryptos are lining up to go public. Maybe they see a more friendly regulatory environment, but that remains to be seen. So we're watching the tariffs, we're watching these fintech IPOs are going to come out, and we're going to see who else announces. And we've got a new one that came out this week. But first, I do want to talk about this Newsmax IPO. So Newsmax filed confidentially for an IPO back in September 2024, and we didn't think much of it. This is not a big company. It's a pretty well-known name in conservative circles, but it's definitely a second or a third tier media company, and it just wasn't big enough to get it on my radar. So I wasn't watching it. The next thing we know, this thing IPOs on Monday the 31st. The IPO price is 10. The stock opened at 14. And within a day, the stock was trading up at $80 a share. Closed at $83 a share on its opening day. And that's something that's going to get our attention. The very next day, it traded up to around $265 a share. Remember, this IPO is $10 a share. That's pretty wild swings. And not something that is indicative of a healthy IPO. It's something that's happening here. And this ultimately became a meme stock. And apparently some of the the forums on Reddit and other people were identifying this as a low float stock that they could manipulate by buying it and holding it and watching it go up. So I want to just try to pick apart this a little bit, why this happened. So first of all, this wasn't a traditional IPO. This was a Regulation A plus IPO or a Reg A plus or a mini IPO. If you're not familiar with these, this is a type of IPO that came out with the Jobs Act of 2012, and that law opened up a lot of different fundraising opportunities. Most notably is equity crowdfunding. If you remember, before this law, Kickstarter allowed you to invest into not companies, but to products. You could launch a product on Kickstarter, but you couldn't buy equity in a startup. Like an Oculus Rift was a famous one that came out of Kickstarter. This law also enables companies to raise up to $75 million through this Reg A plus offering. This has been a underutilized tool. Now, I've seen a few of these happen. They started happening around 2016, 2017. I invested in one in a company called Myomo, which is a exoskeleton company that makes prosthetics for people that lose movement in their arms. I invested in one of these, actually doubled within a couple days on the Myomo IPO. It was a Reg A plus, and this Newsmax was a Reg A plus. So they raised the 75 million. They sold 7.5 million shares at $10 a share, and they sold these primarily to retail investors. So they were selling this off of their website. There was a company that was facilitating this Reg A plus for them. And then Webull was actually offering shares. I got an email from Webull saying, hey, if you want to invest in this IPO, you can through Webull. So it's good to see some retail access. So if retail investors participated in this, they may have had a 2,000% gain at some point. Stock's come down pretty significantly since then. It's now trading, as I'm talking about this, around $43 a share, but quite a wild ride. And unfortunately, this is going to get marked as an IPO, even though it wasn't a traditional IPO. And seeing that there was this frenzy or this meme aspect to it, and that investors were acting irrationally, it wasn't really the kind of IPO we want to see, but it could entice other companies to go public, even though this has been kind of crazy. The main reason why this thing spiked is because the float was too low. They only released 7.5 million shares for the float, and that was out of a total of 128 million. They only floated 6% of the stock. When you have a float that small and it catches on to the meme traders or the momentum traders who see that the float's that small, they started buying in, and that's what took the stock up. Ultimately, I think Newsmax is too big of a company to execute one of these Reg A plus IPOs, but it's an easier way to IPO. The regulation was set up so that smaller companies could IPO without all the SEC scrutiny that a normal IPO would get. And so I think Newsmax saw a shortcut to IPOing, even though they were bigger than a company that is really targeted for the Reg A plus. They used it to go public, and now they're a public company. So I guess congrats to them. I will say that these Reg A plus IPOs have been underutilized, and there are some people working on improving the framework for regulation crowdfunding and equity crowdfunding and this type of crowdfunding. So ideally, they want to be raising targets and raising limits so that more companies utilize this kind of fundraising. I normally cover the traditional VC, venture-backed types of companies on the website and on the podcast, but I have followed quite a few of these companies that are using regulation crowdfunding, like Boxable, Miso Robotics, another one that comes to mind. Aptera is a car company. Energy X is another one, a lithium mining company. So companies are using this framework for raising funds, but traditional venture capital is where most of the really promising companies go. And sometimes I feel like the companies using the crowdfunding maybe they're not capable or they're not good enough for venture capital, because if they could raise from venture capital, it'd be a lot easier. But then again, equity crowdfunding is a great way for retail investors to participate in startup investing. So it's definitely something we watch and want to see more of. But this kind of trading action after the IPO is not something we want to see, even though it could lead to more IPOs. That brings me to another recent IPO that's been acting a little bit irrationally, and that's CoreWeave. And I promise this is the last time I mention CoreWeave on this podcast. I think I've talked about it in all of the first 5 or 6 episodes now. But CoreWeave was this big AI, pure AI company IPOing, and there were high hopes for it, but the negativity turned pretty quickly on Twitter, people questioning this business model. The IPO priced below the range, and then it opened below the range, and it closed, I think, flat for the first day of trading. And for the first day or two, this IPO traded below its IPO price, and then suddenly it reversed course on the third day on April 1st. The stock reversed course, and it traded up as high as $64 a share, and it's now at $55 a share, even as the market is doing pretty poorly. So what's going on with CoreWeave? The only thing that I saw that maybe changed the narrative of this CoreWeave IPO and its future prospects was this guy made an appearance on the All In podcast, which is a pretty massive podcast. Guy named Gavin Baker. If you go check out the podcast, it's somewhere around the 11-minute mark where he starts talking about the CoreWeave IPO. He essentially says that what they do is really hard to do, and this is not a commodity, what they're doing. Taking all these GPUs and combining them together and synchronizing and doing that for AI is not easy, and that maybe investors on Twitter were a little negative and not informed enough about this company. And so that's really the only thing I saw that maybe changed the narrative around this company. I never heard of Gavin Baker before, and so I was like, well, who is this guy Gavin Baker? And I read his bio, and it turns out he used to run the Fidelity OTC portfolio, the OTC mutual fund at Fidelity. And this fund has absolutely crushed the S&P 500 over the past 25 years. And I know that because I have owned it for 25 years. This was a mutual fund in my very first 401k. I bought it and I've held it for the last 25 years, and it has crushed the S&P 500. And even through this period of 2009 to 2017, this fund has outperformed the S&P 500. So this guy, Gavin Baker, knows tech. He knows Jensen from NVIDIA CEO. He says he's known him 25 years, so he mentions that in the podcast. And this guy's a tech investor, and he really knows what he's talking about. So really, it's the only thing that I found that reversed this CoreWeave IPO, and it's great for anybody that participated in the CoreWeave IPO, because usually when you buy IPO shares, you're required to hold on to them for 15, 30 days, depending on what broker you get an allocation from. Anybody who invests on Robinhood has a 30-day anti-flipping policy that you want to abide by, because if you flip the shares, then you'll get penalized and you won't get access to other IPOs for the next 60 days. But every broker has their own anti-flipping policy, and you want to try to not flip shares. So people who did buy into this CoreWeave IPO and were worried about the flipping policy actually got a pretty nice gift here. Within a couple of days, the stock is up. So what we thought was going to be a negative IPO turned out to perform a little bit, and it's even holding up as the market is lousy with the tariff stuff. So overall, I think this is positive, but it is kind of showing maybe the market's taking some time to understand more about this business, or just the market's doing what it's doing, or things are just kind of out of whack with the tariff situation. Now that the price has come back up above the IPO price, maybe Klarna and the others are feeling more comfortable about moving forward. We did see a new filing today with Circle, and I'll talk about that in a second. But hard to believe that one analyst or one hedge fund manager or venture capital manager can turn the price around like it did. And there's probably other factors going on. That's just the one that I saw. Overall, I think it's positive for IPOs, and the irrationality of Newsmax, that could entice bankers to move forward. Bankers want to see retail investors and institutional investors driving these prices up so they can exit their positions, or they can offer shares to their best clients and give them a price pop. VCs like it because they want to exit and get out of theirs and move on to the next private company. So will Newsmax and CoreWeave kick off or strengthen the IPO markets? I think it will. Tariffs, though, uncertainty with the tariffs, that may need to wiggle out a little bit before more companies file these IPOs. The tariff situation was definitely not as expected as the market is showing today. Hopefully it doesn't crush or close the window of the IPO markets. We'll be watching. Another good sign for fintech IPOs. On Monday, the 31st, we got an article from Fortune saying that Circle has hired banks for a long-awaited IPO and is expected to publicly file in late April. Circle has been on our radar for quite a long time. I first wrote about this company about 18 months ago. Circle has something called the USDC. It's a stable coin that's pegged 1-to-1 to the dollar. It enables international transactions. So if you convert your dollar to a stable coin like the USDC and you transact overseas, you can avoid the SWIFT network, which is slow and expensive and outdated, and use APIs with Circle to facilitate transactions. So app builders and developers can build on these APIs. It's really a new way of facilitating transactions all over the place. But when I read about Circle, when I researched this company, it was the first use case that just really made sense to me, that businesses can use this, that corporations and individuals and developers to facilitate transactions internationally. March 31st, we get this article from Fortune. And then the very next day, April 1st, not the end of April, but the very next day, Circle filed for an IPO. And it was a bit of a surprise to get it that quick. And we knew it was coming. It was in our top 10 list of IPOs for 2025. So we knew it was coming, but we didn't know that it was going to come that fast. So that Fortune article was the first mention of that was coming soon. It came sooner than we expected. So we now have another S1 to look through. JP Morgan and Citigroup are underwriting this one. And this co-founder, Jeremy Allaire, apparently he's a second or third time founder. And two of his companies previously have IPO'd. He's really been pushing toward an IPO. And what I understand is some of the crypto enthusiasts or the crypto purists don't like this idea of an IPO in general. They'd rather see this company stay private. It kind of goes against what they believe. But they are moving forward with an IPO. And there's all kinds of information about circulation of the currency, the USDC currency, the minted and lifetime on-chain transaction volumes. So this currency is being used, and really it comes down to the adoption. So this company is going to succeed or not succeed based on the adoption of the USDC. And that's a little different from Ripple. Ripple has a similar new stablecoin product, but it also has its XRP. And I did a little research on what's the difference between USDC and XRP. XRP is a cryptocurrency. It's not a stablecoin, so it's not pegged to the dollar. Ripple has created a stable currency, but it says here, overall, Circle's revenue model is built around earning interest on stablecoin reserves, transaction fees, and monetizing blockchain-based financial services. That comes out of the S1. And then the USD acts as a digital dollar that businesses and individuals and institutions can use for payments and remittances and DeFi applications, making it more attractive for payments and store value purposes. XRP, Ripple's XRP, is designed for fast and cost-effective border transfers with a focus on institutional use cases like bank liquidity and Forex markets. So similar products. I think Ripple's new stablecoin is more aligned to the USDC. And I'm not a crypto expert by any means. Whereas XRP, the value of that currency on its own could help raise the value of Ripple. And I think that's why people really like Ripple, is they see the currency itself, the fact that Ripple holds the XRP. And as that value rises, then they could sell it and liquidate to raise funds. I'm not going to dig into the S1, but you can go to accessipos.com, search for Circle up in the top right corner. There's a little search button up there in the top right corner. Search for Circle. You can explore more about this company. And I've got a link to the S1 filing. We're in the countdown phase now where Circle has released this S1. Analysts are going to look it over and decide if they want to invest or not. And we should see an amended filing within a month where they'll amend the S1 filing, and that kicks off the IPO roadshow. That sets the terms. It's usually about 10 days or so from the amended filing that the IPO happens. When they kick off the IPO roadshow, we usually know what the date is at that point, about 10 days out. So keep an eye on the updated filings for Circle. Also watch other fintechs coming down the line, because we know that Gemini has filed for an IPO confidentially. And Gemini is the Winklevoss twins. We talked about that, I believe, last week. Also, Kraken, another crypto exchange, is in the pipeline. And these companies are taking advantage of the changed regulatory environment, or the perceived friendly regulatory environment for crypto, and moving forward with their IPOs. Circle is going to be the first one. It's the one that we've been anticipating for the longest. It is the one that we expect to happen. The valuation is still up in the air. We don't know where that's going to be. Transaction volume on the secondary markets looks a bit thin, especially on Hive. I'm not seeing a lot of activity. Caplight pegs this pre-IPO valuation at about $7.6 billion, and that's down from $8.1 billion during the Series F in April 2022. So this was an $8 billion company just a few years ago. In April 2022, that was actually after the crash of fintechs that happened in 2022. So that might be a pretty fair valuation. I did see a report that this thing was going to be closer to a $4 billion valuation and raising about $750 million. We'll see. We won't really know until the terms come out, and the terms could change between now and a month from now because of this tariff situation. And we may get the Klarna IPO before then. We may get the eToro IPO before then. So we'll be watching the S1 filing to see where this comes out. But generally, I think this is great to see a crypto fintech come out. Fintechs have certainly come down in valuation since 2021 when they were sky high. Klarna is down 66% from its high or more for this IPO, and Circle is going to come down too. But we'd rather see these companies IPO at a lower valuation so that we can buy them in the public markets or buy them at the IPO price and hold them for the long term. Ideally, we want to be investing in these companies for the long term and not just trying to get a pop from the IPO. Let's move on to IPO Radar news. This is when I talk about companies on our IPO radar or our pipeline. And these are companies that are generally worth more than $1 billion, generally have name recognition either from the public or from private investors or the venture capital world, and usually have a legion of people out there who are interested in investing in these companies. I monitor about 150 of these, 200. I'm writing analysis of these IPO Radar companies every week. I publish them to the homepage, so you can always see them there, or sign up for my newsletter and you'll get it in your inbox on Sunday. And so today with IPO Radar, I want to talk about humanoid robots because, man, this is a hot sector of venture capital right now. I think part of it is these robots really fit into the current social media environment where you can show these short clips of robots doing cool things, and they're going to get a lot of views. And Boston Dynamics started this years ago. They had dogs and humans doing backflips and all kinds of stuff. But with these robots, they're just doing really cool stuff. And venture capital is taking notice. And the first one that I really wrote about was this Figure AI. Figure AI is the leading company in this space. And a big part of that is the founder, this guy, Brett Adcock. First of all, he's got a very storied background in venture capital and in raising companies. He started a company called Archer Aviation that went public via a SPAC. And this is a flying machine company, like a flying taxi company. So he's a successful founder who's left this aviation space to go into humanoid robotics. And so it seems like he's got a head start on other founders who are doing this. He's also very active on social media. So he's always posting about his robots and what they can do. They can hand each other apples and they can look at a table and decipher what the things are and how to handle it. So they're actually selling these robots to BMW. And so he's shipping robots already to BMW. And the reason I bring it up is that Figure AI is in talks to raise new funding at a $39.5 billion valuation. They're discussing a $1.5 billion funding round. Now, if we look at the previous funding rounds, they raised a Series A in March 23. They raised about $70 million. They raised a Series B in February 2024, 1 year ago, at an estimated valuation of $2.68 billion. They raised $675 million, and now they are raising $1.5 billion at a $39.5 billion valuation. And I have seen Figure AI on several secondary marketplaces reselling shares or raising funds through SPVs for this fundraise. But when that number came out at almost $40 billion, that really blew my mind. I think it is part of this AI revolution in a way because they can integrate AI into the robots. And they announced something called Helix, which is a software platform, I think, for these robots. So once they build these robots, they can upgrade their software. They can provide this like operating system almost for AI robots and programming them. So really blown away by that valuation increase. And by the way, many Access IPO readers, and myself included, own Figure AI through the ARK Venture Fund, the Cathie Wood ARK Venture Fund. It's available at SoFi Invest. Figure AI was a pretty early investment. I assume they got in at least a year ago. And so they're in at that $2.6 billion valuation. If you haven't invested in these pre-IPO funds, this one, the ARK Venture Fund and the Fundrise Innovation Fund are the easiest way to invest in pre-IPO startups. They have low minimums, and if you're a U.S. resident, you just have to be 18 or older. A minimum investment, I think, is $10 for Fundrise, $500 for the ARK Venture Fund, and you get exposure to some pretty cool companies, and Figure AI is one of them. Humanoid robotics really exploding. This week, we also got another report about a company called Agility Robotics. They're raising $400 million. And I think it was the information that broke this story. And they have a robot called Digit. I'm sharing my screen right now. You can see what this robot looks like. And again, they have videos on the internet. You can go see what this thing can do. But they're designing these humanoid robots for warehouse work. But I think the idea is that they can become a household chore doer. They can probably become soldiers someday. There are no limitations for applications of these robots. And you'll hear Brett Adcock talk really big ambitions about these robots and what they can do. And to some extent, that is exciting. These things can be used in warehouses or for car manufacturing. There's a video for the Figure robot who's working at a BMW plant, and that's really cool. I think it's a little terrifying to think that these things could be soldiers, and even having that robot, like Jetson-style robot in your house to do little things. The piece of this that is really important to watch is what these are going to cost and how much it's going to cost to manufacturing them. Figure AI is building out manufacturing and proprietary manufacturing methods and finding ways to build these things cheaply so that they're affordable. There's going to be a very small market of people willing to pay $50,000 for a humanoid robot to walk around their house. But $1,000 or $2,000 or even up to $5,000, maybe people are going to start thinking about this. If you have a 24-hour maid that's going to clean your house or do your dishes, babysit your kids, I don't know. Like it's pretty cool. And for now, I think it's still in that Jetsons phase where, maybe one day this is going to happen. They're going to start in these warehouses, but Figure AI is moving along pretty quickly. Agility Robotics raising $400 million. So that's a big news story. It raised $150 million in Q4 2024, and that was at a $1 billion valuation. And now Q1 2025 or Q2 2025, raising another $400 billion. I think the VCs and the institutional investors who are not involved in the Figure AI deals, they want to talk to competitors. So Agility Robots is another one. And there's one called Apptronik. And I'm sharing my screen again. You got robots carrying boxes in warehouses, which seems pretty cool. They walk upstairs, they wave hi, they say hello. They're general purpose robots. This one here says 5'8", 160 pounds, 4 hours per battery pack, payload of 55 pounds. Apptronik, I have also been seeing in various places. So we got a news story that said Apptronik closes an additional Series A funding round, bringing the total round to $403 million. I haven't written about Apptronik yet, but it's coming soon. So there was a previously announced $350 million round led by B Capital, Capital Factory, participation from Google, Mercedes-Benz. So Apptronik is on my radar. I haven't finished the article. I think I'm writing about it this week or next week. So we're seeing a lot of money going into humanoid robotics. Apptronik is another investment by the Cathie Wood ARK Venture Fund. So I'm sharing my screen. There's Figure AI. There's Apptronik. It's getting a lot of attention. My feeling is that these companies are raising money so fast and the growth is so heavily anticipated. It kind of feels like driving cars, self-driving cars about a decade ago. 2012, 2013, 2014, self-driving cars was all the rage. And people kept saying, oh, self-driving cars are going to be here in a year. Get ready. Buy NVIDIA chips. Buy whoever's working on self-driving cars. And it's taken about 10 years for them to really start cranking. We know that Waymo is pretty common out in California. We just got news that Waymo is going to be in Washington, D.C., where I am in 2026. Humanoid robotics kind of feels like self-driving cars in that it's just not quite there yet. It's coming. Like, there's no doubt about it. These robots are going to get better, and it's coming. But how fast? I don't know. BMW is buying some of these. If you watch the videos of these Figure AI robots, they're kind of slow. I think they've been designed so that they can keep building on what they've built. Like, these robots have more capabilities, or they can program more capabilities into them. But once they have the robot built, then it's just a matter of the software and the AI built into it that can make it do more things. So there's a lot of potential with them, but I just don't see it coming to my home in the next 10 years. Maybe in 10 years, they'll be affordable. Don't forget about Boston Dynamics. They are making really cool robots. I think they're owned by Hyundai now, Hyundai Motor Company. So Boston Dynamics, a lot of people are interested in that company. And then the elephant in the room, of course, is Tesla. And Tesla has been building humanoid robots. And when you talk to Tesla investors, Tesla bulls who think that Tesla's going to be a $50 trillion company someday, they say robotics is one of those drivers. From what I understand, the Tesla robots are behind where Figure AI is, so it's not a priority. But they're working on the software for the self-driving cars. And so you can probably guess that they're working on these humanoid robotics with the software, and there's some interoperability with AI on both sides. Another thing to keep in mind is China and Asian companies are building humanoid robots, doing really cool stuff. And again, they're all over social media. I don't really follow these companies, but occasionally I'll get one of these viral videos of a robot doing something really cool. I was at Florida, Disney World, and there was an R2-D2 robot that was communicating with us, sort of like we were talking to the robot, and he was interacting with us in a way that, like we say, spin around, and he knew what spin around meant, and he'd spin around. So there's a lot of cool stuff here. I'm a little skeptical of just the timing on it, but keep an eye on the manufacturing costs, what these things can do in the AI integration. The innovation here could be relentless. We've already seen it in manufacturing robots that are not humanoid, but now it's humanoid robots that people are excited about, and the VCs are putting their money there. So watch that space. Last on our IPO radar news of this podcast episode is Plaid. If you remember, Visa wanted to purchase Plaid a few years ago. Government regulators stepped in and said, no, that's anti-competitive. And so Plaid sort of let go of its acquisition ambitions and started focusing more on the road to an IPO. So if you're not familiar with Plaid, Plaid is this classic fintech that it deployed technology to make the user experience online with financial products much easier. So if you want to connect your bank account to an app, like a phone app, like Robinhood, or any personal finance software that I use, is usually connected with Plaid or something similar. And so Plaid really led the way in that fintech space. At its peak, it was worth about $13 billion. But this time around, they've raised $575 million, led by Franklin Templeton alongside Fidelity Management. So $575 million at a $6.1 billion valuation. And it says it will not go public in 2025. I'm sharing a TechCrunch article here that kind of lays out the deal. The valuation peaked at about $13.4 billion in 2021. We know everyone's valuation in 2021 was overvalued in the fintech space. So it raised $425 million Series D in April 2021. And here it is raising $575 million worth of common stock at $6.1 billion post-money valuation. The reason this was one of the companies I was most interested in early on was I just felt that this software was so slick and it helped with a lot of problems that I had. If you remember, back when you were connecting an account, you used to get those little micro deposits in your bank account. You submit your bank account information to the partner, they'd send a small deposit, you'd verify the deposit amount, and then your banks and your fintech products would be connected. And Plaid just eliminated that whole ridiculous process and made it very low cost, very seamless, and just a great user experience when it works. Usually works, sometimes it doesn't. But what I've seen over the last few years is that several copycats have come out. There's a company called Yodlee, there's MX Technologies, and Finicity, which I believe is MasterCard. So MasterCard got into this space when Visa wanted to get into space, but they got kicked out by regulators. So interesting to see that MasterCard got into the space with Finicity. But I think from my experience, just having used a lot of these different tools with connecting with various fintech software products, Plaid never really had a moat, and that several companies have come out and built something very similar. So I was really optimistic about this company a long time ago when I first wrote about it, and I'm not so optimistic anymore. It's only up a little bit from its Visa takeover price. I think this company may end up IPOing at some point, but it could end up being an acquisition candidate again, because I'm not sure people were all that excited. I don't think there's the moat that people hoped for. But nonetheless, it's another one of these fintech that reached its apex a while back, and its valuation has come down about 50%. And with AI, we're seeing that AI is peaking now, and CoreWeave went out on its peak. So we would rather see that peak get popped, or that bubble get popped, come down, and then launch the IPO with a profitable, high-quality business. And I think Plaid does fit that description. The question is competitiveness. How competitive is it, or how cost competitive is it with these other software companies that are building similar APIs? That's all for today's episode. If you like what you're hearing, there are 3 ways you can help support the show. The first is to just click follow or subscribe wherever you consume your podcast. Spotify has video, YouTube has video, but anywhere else you get your podcast, just hit that follow or subscribe button so you don't miss episodes in the future. It also helps just get me some exposure by raising the number of followers and people paying attention. Number 2, links in the description. You can subscribe to my Access IPOs newsletter. It comes out weekly on Sundays, where I share the latest podcast episode, the latest radar companies, and stories from the week regarding the various IPO radar companies. The third way you can help support the show is to write a 5-star review wherever you consume your podcast. If you don't think this is a 5-star review podcast, send me an email and let me know what I could be doing better. I'm working on improving the show every week. But if you're ready to write a review about the show on one of the podcast networks, and it's a 5-star review, I'd appreciate that. That helps to get me in front of more listeners, helps to grow the show. That's all for this week's episode. I'm Craig from accessipos.com. Thanks for watching. Thanks for listening. And I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.